Daniel, gracias. Okay, here we are. Good afternoon. I'd say it's always the toughest session when it's straight after lunch. And Victoria and Daniel did this to me already in January, so I must have done something wrong to them in the previous life. Jokes aside, I hope the audience has their coffees ready. We have an hour and 50 minutes ahead of us. And we have an interesting topic, and an hour and a half or an hour and 15 is definitely not enough, because we do have people on the panel with lots of experience, both in blockchain and in financial services, but particularly also in innovation, which I think it's very, very important. So I shall start with the ladies first. Nadia, would you give me just literally 2 seconds introduction and let me know where you are live from as well, which city?
Okay, thank you, Mai. I'm Nadia Filali. I'm just talking now from Paris today, and I'm head of blockchain and crypto asset program for Caisse Dépôts. It's the most important French public and financial institution. And at Caisse Dépôts, we launched the blockchain program since in 2015. Mm-hmm. And we are a team around 10 people working on business development and technical part. And most of our projects are with our partner from financial industry. And so we are working on internal project, but most on a consortia project like ClapChain, with the main actor operating in blockchain in France and in finance, like startups, banks, or insurance, and also in industrial project like Liquid Share, and also in association project like INADBA that we launched last year, and we are a member of the board.
Very busy indeed. Very good. Thanks, Nadia. And David, go on to you.
Hi, so I'm David Creer. I'm a innovation consultant and DLT specialist at GFT. GFT, we specialize in financial services. We working with banks. Basically, every large European bank is a client of ours in some way, shape, or form. We specialize in innovation projects, as well as standard banking, all the way from mainframe right through to AI and quantum. And obviously, a big focus of that is blockchain. We are about 5,000 people spread around the globe. We're a multinational company, and we've been in the blockchain field for, 6 years now, which might not seem a lot, but it's quite a lot in blockchain terms, because I kind of think about them a bit like dog years, right? So I think that's what, like 30, 35, something like that. So yeah.
And you're joining us live from Barcelona.
And I'm coming from Barcelona, yeah, that's right. Yeah.
Fantastic, very good. How about you, Sebastian?
Oh, hello everybody. I'm talking to you from sunny Frankfurt. Yeah, obviously not common in Germany to have such sunny weather. Sebastian Kraft. I'm a senior product owner of distributed ledger technologies of Commerzbank. Commerzbank is the second largest privately owned bank in Germany. We're investigating in distributed ledger technology since 2016 already. Did a lot of POCs, a lot of pilots, and now have the first applications also running in production. We're investigating all the fields which we think might be useful for banks, like capital markets, trade finance, identity management, payments, and also crypto custody stuff. And yeah, now we are more or less in a phase of coming a little bit from the R&D phase into a production phase. And yes, I'm very happy to be here, and I hope I can share some valuable insights today.
I'm sure will. Excellent. And Dean, I'll pass on to you, please.
Hi to everybody. I'm calling from Paris. Here is sunny as well. I think we can share the sun everywhere today, I hope. So my name, as you heard, is Dean Demellweek. I work in BNP Paribas Corporate and Investment Bank as a digital transformation leader. Precisely, I sit actually in the intersection of innovation, emerging technologies, and business. And I work on blockchain research and fintech research, market intelligence across DLT and blockchain AI space. So this is in short.
Excellent, fantastic. And last but not least, I should say, Scott, please.
Thanks, May. Yeah, calling from Amsterdam today. So I work for ING within the distributed ledger technology team here. Specifically, my role is as an initiative lead, looking at a lot of my expertise has been in privacy for DLT. So specifically, I work across one project which looks to use kind of cryptography, so like zero knowledge proofs, to actually build out privacy-based solutions. But yeah, previously also other areas of kind of enabling more widespread use of DLT as well. So things like interoperability and scalability and that side of it as well.
That's brilliant. Thanks a million, Scott. Okay, guys, that's great. Thanks for the intros, and it's great to see that it's sunny everywhere. Hopefully it bears well for our panel discussion. So blockchain and financial services, I mean, talk about a wide title for our panel discussion, okay? Very wide, and yet with some common denominators, just looking at all of you here in the screen. We're talking about certainly a business angle. I think the financial services, particularly the projects you've all worked on, has that business enterprise angle to them. The obviously interest in research, emerging tech, obviously the blockchain piece, and third but not least is the innovation piece. So the three of them working very, very closely to all of you. But I want to bring all of that to the present. And you've all been in blockchain for, as David mentioned, dog years, like, you know, 5 years at least at a minimum, okay? So if and stay with me for a second here. I started looking at blockchain maybe sometime in 2017. If I had to summarize every year in blockchain, I would say 2017 probably was Bitcoin. That's all people could talk about. 2018 was ICOs. 2019 was STOs. 2020 might be DeFi or centralized DeFi or whatever it is. But for blockchain in corporate, blockchain for enterprise, blockchain for the areas you guys are looking for, is 2020 the year that we go from POC to reality, to utility? Who would like to go first? Otherwise, I'll pinpoint one of you. Sebastian, maybe?
Yes, sure. I was just unmuting myself. Yes, I can say a little.
Read your minds.
Yeah. A couple of words here. Yes, indeed. So the financial industry was one of the industries which was starting to apply blockchain first, because we saw a lot of danger for us. We also saw a lot of opportunities for us. And we now had a couple of years from, as you were already saying, POCs and piloting. And we now have to prove that the stuff which we developed the recent years is really working and really bringing some benefit to the financial services industry. And if I look across the areas which I was just saying, and I think this was one of your questions, I think there are a couple of topics which are coming near to production at the moment. I don't want to deep dive into trade finance, but trade finance is obviously one of the cases where I would say this is a very good case for blockchain in many directions. But also stuff like payments. I think this morning we already had a couple of discussions around CBDCs, programmable money, and so on and so forth. That's something where we see a lot of demand from our customers, or at least a rising demand, especially from the corporate side. Then all the things around capital market securitization tokenization of securities. Here Germany is at the frontier. They are really pushing this topic at the moment. So this is also very interesting. And last but not least, also identity management is something which is a kind of a ground layer for all the other applications. And I think Scott will confirm that having trustable identities in the blockchain environment is a very, very important topic. So this is also something which is really popping up now. So my feeling is that at the moment there's a lot of things going on, and I'm quite sure that we are going to have a massive transformation in the one or the other area in the next, let me say, 2 to 3 years latest.
2 to 3 years latest. Okay, very good. So let me pick on trade finance, Sebastian, and for that I'd actually go to you, Scott. ING have obviously been probably one of the first ones really to work together on a consortium of sorts, okay, and be part of Marco Polo. So this started almost 2 years ago, okay. Like, what can you? I mean, are you close enough to develop the development of that? I mean, it something that at the time it really was hailed as a first. Maybe the uptake, the volumes haven't been as fast as we wanted. Is because we're still adapting to it.
Yeah, I think so you mentioned trade finance as a whole. I think yeah, trade finance in blockchain has definitely been an area for us for ING that we've seen a lot of potential in, and we've been very active in. Quite rightly, you mentioned Marco Polo, but also, for instance, Comgo, which we actually have, which is in production currently. And actually, what Comgo is looking to do is digitize and streamline a little bit the kind of commodity trade finance process and some of those documents that are essential in that process. So things like letter of indemnity and letter of credit and that sort of thing. And I think it has what we're seeing is that it does have a lot of potential, actually, because the processes that we're looking to change with these are ones which have been around the same way for a long time now. So for 100 years, for instance, pretty much the same. But particularly we're seeing a large uptake at the moment, actually, because particularly when you think of fraud and items like that, so the trust element that we can deliver there. So some of the listeners may be aware of the fraud case which was seen in Singapore fairly recently, the trade fraud case, and actually we're seeing a lot of interest in things like Comgo off the back of that, actually, as a key to actually, more than anything, I think, an enabler of trust.
Unmute, hero. An enabler of trust. Very good. Which is quite interestingly something that, I mean, this morning so far we talked about payments, we talked about SSI, self-sovereign identity, but trust was not a topic that was picked up this morning, which is quite interesting. But we'll come to that, I think, in the context of financial services later on, I hope, in our panel. Thanks, Scott, for that intervention there. I'd like to and continue with that theme of the work in financial services. I mean, you pretty much represent strong financial institutions in Europe. David, you represent someone, obviously a very large company globally who supports those financial institutions. Yourself, Nadia, as well, in the Caisse de Dépôts, you guys have a consortium as well. I've been working together as well. Would you share your experience on that? And I'm not sure you actually looked at trade finance as well.
Okay, Mai. No, we are not working on trade finance because it's not in our. We are not working on that. We are working on investments, and we are working especially when we work about the opportunities of have some lean work in putting blockchain in the post-market value chain. It's why we began to work together with BNP, Société Générale, Crédit Agricole, Euronext, Euroclear, and AFS, and in launching Liquid Share. That the first aim was to develop an infrastructure in blockchain for SMEs, listed and non-listed, on the post market. And now we open the focus of Liquid Share on the STO possibilities also. And the fact is that when you work in blockchain, working in blockchain for yourself, it's not an issue. It's important to create consortia with other groups or small or big structure to contribute to the development of the ecosystem and to take the real capabilities and what is the issue of blockchain in the financial services. And so we decide in the beginning to work in an innovation consortia named LabChain, where we explore the things. In the beginning, many of the people was in the money departments, but we saw that more people who are working in CAB and post-market who are very interested in the subject. Now, sometimes we are going in the money subject also. And we need to, how is it? We need to develop some universal framework with different partners to have a certain level of cohesion between us, and because it's very important to keep an interoperability between all the system that we offer, because even if you plug the new infrastructure of blockchain, it will be the same that we have now in our IT system. If there is no interoperability, it will not work, and it will be very expensive to manage. And we have also to be careful to have the same view on the trust of the system also, and on to verify that we provide the security and the legal compliance on the system that we use.
Okay.
Okay.
Okay. Sorry. Now it's yeah. So let me pick on that interoperability. It's a long word. Because I'm trying to kind of bring in all experience there. David, I know we very recently we just looked at the DAML joint agreement. Okay. Yeah. Could we, I mean, I'm not sure, obviously it's kind of hard to gauge the audience here. It's not as we had it in January, which we had a fantastic audience, very engaging and stuff, but maybe 2 minutes for those who might not be, who understand financial services, but may not be as quick to DAML. Why is the DAML announcement the last 2-3 days so important in terms of interoperability?
So for a start, for those who are not familiar with DAML, DAML is almost a universal smart contract language that spreads across DLT platforms. So you can use DAML on Corda, you can use DAML on VMware blockchain, you can use DAML on a variety of other different enterprise and open source blockchains. The idea is to spread it across these platforms so that you only have to write your code once and then deploy it to different platforms as you go. We have been, I would say, a strategic partner of DAML for the past 3 years. A little bit longer than that, and we've built up a big practice around that in GFT. It supports interoperability because it allows you to be able to deploy to these different platforms, and some of these platforms, like we saw earlier last week, they themselves also support interoperability. So the blockchain service network, for example, which we're just forging our partnership with now at the moment in which is going to be a global network, which underneath supports lots of different platforms. The VMware blockchain itself, which again supports lots of different platforms and interpretations. So this idea that you can write your code once and then deploy it to a lot of different platforms promotes interoperability. And then on the other side, DAML itself as a language is incredibly efficient. So something you could do in, say, 300 words, if you wanted to write it in Solidity, you actually do in maybe 100 words in DAML. And it's safer because you can't write code which is kind of you can't use anti-patterns. You can't back yourself into a corner where you say, okay, party A agrees with party B without party B actually ever having agreed to that. So it's quite a strong thing. And I'd just like to say congratulations to Dean and everybody in the BNP Paribas as well for your news earlier this last week.
Cheers, thank you. David, just to add something on it, if we have startups actually on the call, I think DAML language is ideal for them to actually, I would say, rapidly create MVP. In matter of a couple of hours, you can create MVP and test it via a double platform as a cloud. So I think this is a very powerful solution, and this is why I'm saying for startups is actually ideal, and for corporates as well. And this is what I actually try to do in our organization, actually, to create kind of design thinking workshops where we can actually rapidly create MVP in a couple of hours. And the other thing actually regarding the DAML, I would like to say now that it's possible to do without coding. You know, the no-code, low-code approach, they're already integrated. I think E-Intelligence, so the company already integrated the DAML, and now they enable actually users to actually drag and drop to use those models. So I think for testing MVPs is a very good solution. You mentioned our involvement with DAML. Yes, we actually signed a partnership with DAML in APAC. So what does it mean actually? That we would like actually to bring together to APAC market participants both efficiency and new revenue streams. So the first application, I think it's going to be about a smart election process, where actually for corporate actions. So it's very cool because the investors actually will have a straight access to corporate actions, chain data, and to create kind of to enable them to have actually better understanding of real-time markets. And this is the real, I would say, benefits. The other benefits are actually regarding trade and settlement as well. So I think our colleagues in APAC, I believe they're going to create, I would say, connection directly in real time for trade and settlement applications. So just when I'm talking about this, I would like to mention Australia Stock Exchange is one of the biggest use cases so far that we saw, and because of this COVID, I would say, situation, so they postponed the go live for April 2020. So the other thing, what I would like to mention regarding to this use case, and I think we will agree now, what we see, we see in parallel this kind of digital transformation using native digital assets with actually conventional technology. So going in parallel until actually probably, as you mentioned, in a couple of years' time, we will probably switch. But I believe that probably this kind of approach will be for next 10 years.
Maybe.
Oh, sorry, go ahead.
Okay, just to add something on the interoperability thing which you were asking. I think one thing is indeed, and that's I'm very happy to hear what you were just saying. One thing is indeed how to ensure technological interoperability between different networks, for example, is a very important topic. But let me also add that also the non-technological stuff needs to be worked on, like, for example, standards. We are in heavy discussions, for example, with the ICC, the International Chamber of Commerce, with regards to standards for trade documents and so on and so forth. We are developing a self-sovereign identity solution at the moment, where we try to stick, for example, and Scott might know these, all these standards from the DID Foundation and W3C, so on and so forth, and also to shape all these standards to bring everything into this new idea of distributed networks. I think this is something, let me say, more or less groundwork which we have to do as a bank, beside developing our own new products on DLT, doing the groundwork to enable all these things in the future.
Yeah, I agree. So these two actually elements that you mentioned, actually interoperability, interconnection between chains and standards. And I can mention to you one real use case, which is Spunta Banco DLT. I don't know if you know about that. So we participated in this use case. Actually, it's a real use case with 32 other banks. So what is good about that, as you mentioned, standards. So before that, they didn't have a standard actually how to exchange the data information. So the whole use case is about interbanking actually exchange. So actually, what does it mean for them actually to synchronize and reconcile the balances between the branches every day in real time, which is amazing. And exactly what you said, actually, they had they lacked standardization and automation. So this is how I see. So we are going to see probably the first, I would say, wave of those DLT applications in reality in those two when automation and standardization are lacking.
In terms of, I mean, standardization, we know, like, for example, the ISDA, the ISDA have done, I think only recently published a paper actually certainly on standardization and ideas from derivatives and blockchain. And we know that TC307 are actually working on that as well. And they have different working groups through that. So clearly standards are totally different. In terms of purposes for trying to explain the importance of that, I mean, compared to the application of the standards for wireless, you know, how quickly Wi-Fi effectively went from just the lab to acceptance, you know, being in our homes. It was literally pretty much 2 years from acceptance or agreement of those standards in the US to every home in the EU. So I do agree that standards will help. Go back to that point of interoperability. There's an angle there that I want to explore, because I mean it's very rare to have people of your background and experience together to have this chat. You know, we've mentioned for the first 10 minutes we talk about consortia, we talk about all these working together. Now we've briefly talked on DAML and the work. Dean, you specifically mentioned helping, or effectively the initiative of being DAML with the stock exchange in Australia with ASX, but also I think it's the Hong Kong exchange.
Yes.
And APAC.
Yes.
This is the European Blockchain Convention. All of us are working in Europe.
Yes.
Where are the equivalent of what we just announced?
Yeah.
You know,
Thank you.
What are we missing? What are we not having?
Thank you for this great question. You know what we are missing? Regulations, and this is why, because you know what? So what we're talking about here, jurisdictional regulations. You know, because we all agree on this call actually that DLT blockchain technology is global. So you know what? And now actually we don't have a global regulations. Our regulations are very silent. And this is why actually I'm talking about APAC, because of the data. So the data, so the Australian Stock Exchange actually has to ensure that they keep data in APAC, you know, so in Australia, and they can't actually create a real distributed ledger, you know, with nodes sitting around the world. So nodes actually needs to be in APAC. And by the way, so that they are creating this I would say they don't have a consensus, but what they have actually, they have one golden source, and those nodes actually connect real time in this golden source. But the data is actually kept in Australia. So this is exactly the one issue that we are facing. So regulations, but regulations, and they need to I would say catch up with the speed of DLT blockchain adoption.
I would say that I think that we're seeing some movement in that area. So in the last, what was it, like couple of months, we've had, last week only, we had, I think it was a Swiss parliament, had a blockchain act. We had BaFin, sorry, not FINMA, BaFin in Germany, which, basically legalized digital securities effectively being put into production, so that you could then get certified to be able to sell and buy digital securities and cryptos. And also we have various of our clients actively speaking with the FCA around similar projects in the UK as well. So they're in advanced talks around this as well. So, and obviously in Switzerland, they're very advanced in this because it's somewhat of a different ballpark. So I think that regulation will come, and it will come quicker than we think it will now that the ball has kind of got started. And I think that's one of the reasons that we're in a very different space than we were maybe a year ago. So this same conference a year ago, we couldn't really put anything into production. There wasn't even, you just couldn't do it in any space. And I would say that now, out of we have like eight projects going on at the moment, and out of about 8 of those projects, 3 of them are on a path of production, either at the end of this year or during sometime next year. And that's a very different view from what we had last year, where actually we wanted to put things into production, but we couldn't because the regulators wouldn't let us. And then the other thing is about maturity of technology. So technologies such as Demellweek, Corda are a lot more mature than they were a few years ago. And also big companies like VMware, mentioned them before, AT&T, are now getting into the game. And that changes everything. That changes the whole landscape, and large companies like yourselves, so banks or financial institutions, are willing to put more trust into these companies. So it kind of makes it changes things significantly, I think.
Absolutely.
Yes, and I agree with David. I think the things will go quickly on regulation. If you are looking what it's happened in Europe, in 2 days you will have the proposal of DG FICMA on the subject of crypto assets. In France already we have a regulation in Loi Pacte, and we are allowed to distribute token on a ledger and securities on a ledger if they are non-listed. We are allowed also to be a custodian on crypto. So there are some opening room, but the fact is that if you don't open the regulation on the European stage, you cannot do all, because on not listed, it's a very small market. It's one point. The second point, it's if you look at the point, for example, for the post-trade, there is a limitation on CSD, and there is competition on this subject. There is many people working on this subject, and to say that we do lean on the post-market and cutting many intermediaries, I think it would be more difficult that we think. It's a point, and I will join David also on the maturity of technology, because for the moment we have to prove and to demonstrate that we can go on live with many transactions in a few time, and for the moment it's not very clear always. And we have to prove that we know how to manage security. We know how to manage the key to enter in the blockchain. And I will join the point of Kraft on identity. I think it's one of the key points. And we don't know any announce in the press, but last week we launched a company on SSI with Caisse, Dépôts, and 3 other partner, NG, EDF, and La Poste on this subject, and we are working on that, not only on MVP, but to go on live, because we trust that it's one of the key of the entrance of those technology.
I agree with you. And if I may just add, actually, I think so the whole thing, actually, it's very important to understand current regulations and how actually those DLT can actually fit in. And the one example that I always mention, and I will mention here as well, is HQLAX and the Deutsche Börse. Actually, the use case about collateral mobility, and they did it, and it's alive, and it's done accordingly to existing regulations. So there is no cash on the ledger yet, but actually the title actually gets transferred seamlessly, and the existing collateral stays with custodians. So they use the existing regulations. So I think we need to be creative as well, and this is what I'm looking at, actually where we can actually push boundaries, probably with existing regulations, and create, I would say, innovative solution.
And that's exactly the point, or the angle I was trying to look at, Dean. Yeah, which is there's two sides, and they have to be quite separate. Clearly, if we're dealing with financial instruments for which regulations would already exist, and then the technology is actually applied to increasing efficiency and lowering costs, then it's just a case of the plumbing. Effectively the risk is the same, the product's the same, the regulations really start. There's no reason for those not to move from proof of concept to production effectively, because it's still within the regulation construct. The risk is known. That's why we have those regulations there. I think maybe where the uncertainty lies within regulations is where we're moving to something that feels not quite, or does not actually fit into a current regulation. Okay, but I mean, Germany certainly gone ahead with the recent regulations, as David mentioned, for STOs, for digital securities. So I don't want to go down to regulations just yet. There's still a day and a half on the blockchain, in the EBC. And actually on this panel last year, I had a fine. Anyone who said the word regulation had to pay me €1 after the panel. Wow. So we tried to have the discussion around innovation and not go down the regulation rabbit hole. So I'm going to apply that fine again. Anyone who mentions regulations again, for the next 20 minutes, will have to pay me €1 after, a digital euro that ever exists. Okay, so, but let's pick on another really interesting topic that you've actually just mentioned there. I mean, we've talked already about those, sorry, David, you mentioned the projects going into production. Dean, you mentioned already the projects in place with HULX. There's two things I want to probe on those. Okay, I mean, you all work in labs. You have your own innovation labs. Bitcoin started pretty much as a cyberpunk movement, call it whatever. Yeah, almost 10 years ago. Demellweek is open source. How many of those projects that are going to production actually are not that open source? Or the veiled question there is the traditional financial institution, the financial services sector, still not quite trusting the openness of the technology, choosing to maybe rely or trust more a permission type of platform? Who wants to take these a little bit?
May, if I can. I think you are on a point very important on this subject. Because when you are talking about blockchain, you are talking about trust and confidence, and more precisely, we are addressing the blockchain governance here, and what's about private or consortia blockchain versus public, and what's about the consensus that we have to, and the incentive that we want to work on. And if you try to work on public blockchain in a financial institution, you will have in the beginning, I think, some reaction of the the board. It's not very easy on that because people don't know about the governance of this public blockchain, and there is many buzz on the subject, and there is some interrogation of on the email on these things and like this. It's the first point. And because you talk about I will not say the word about the topic that we are talking before. I think for the moment, and perhaps it's moving, for the people who are working with, thinking innovation in finance and thinking another finance system, it's very difficult for the moment. Because we know how to manage finance system with some key actors in the system, with the people who are looking what you are doing on, but imagine that the system is open and decentralized. It's very difficult. It's very difficult for every human being, I think, but it's very difficult. And sometimes when we are talking about blockchain and finance services, we are in the first way just changing the technology for use cases that we know. So I think on this point we can do things, but it will take, it's depend of the time and the cost, but it will arrive one day. And the second time is how to imagine new services or using this technology in a decentralized way, and with open source, for example, on some smart contract or things like this. It perhaps with a subject of some standardization again, and this point is very difficult for the moment, I think.
I think. Sorry, go on.
Sorry, David. Go ahead.
No, I just think, I mean, when we're thinking about open source and private and public chains, I mean, I think they're kind of almost different subjects in my head anyway, because open source, in reality, that one of the reasons that DAML open source is because they were under increasing pressure from banks and other organizations to let the open source community come in and actually go through their code and really properly go through it. So it improved transparency, but that doesn't mean that DAML is going to ever be necessarily on a public network. I mean, actually, DAML has stopped using its own platform, and you can use it on various different networks. But the one thing is open source, which basically means that the code has been opened and can be changed and adapted or whatever, depending on the license. And then the other thing is whether it's a public or it's private platform or not. And I think in the next few years, you're going to see a lot of different types of public platforms, like Cardano, for example, that support side chains and so on and so forth. And you're also going to see, so that you have a certain amount of privacy on a public blockchain, which allows you to be able to work within commercial kind of things that we do in the financial services, and not have everything out there in the public. And on the other side, you're going to have certain platforms like the BSN, which provide private and also public blockchain platforms that are interoperable depending on what you want to deploy at that point in time. So I think in the future, you're going to have much more optionality. It's not going to be A or B. It's going to be really, you might even have one platform that you use for A and B, and you just swap between whichever you want to.
Yeah. Yeah. The other thing actually that I would like to mention here, as you mentioned very well, actually, I think, let's say Corda. So when we mention Corda DLC, so we picture that as a private blockchain, but Corda is public blockchain as well. So they have a public side, public blockchain and private blockchain. And so there are some use cases, I don't want to go deeper now, but they actually interconnect those public and private blockchains. And the best, I would say, example is Dazzle, distributed assets security ledger. So they created this kind of, I would say, solution. So that, and they have a couple of use cases already in production.
And there are some people
where
that
public.
Sorry.
No, but I say this is very, very good what you mentioned.
And there are some people who firmly believe that unless you put your tokenized object or your transaction on a public chain, then it's not really. I don't want to get into this rabbit hole because this is more about an opinion rather than anything, right? And we, as more a technology services provider, we generally just tend to implement rather than have opinions. But there are some people that firmly believe that actually for an asset to be recorded and for it to have a kind of stamped proof of approval, it needs to go on the public chain. And this is, throughout, even through enterprise blockchains. So they're putting certain things on the public blockchain. A lot of the time they're using cryptography to be able to hide what it is that they're putting on the blockchain. So heavy cryptography on top of that. But that gives them a kind of security that it's available publicly, and if anybody wants to check the records, then they can. So there are some people that really do believe that as well.
But when you mention the public, so this is it. So that opens up a discussion about consensus. What kind of is it? Proof of work, proof of stake? And I think for financial services, this is not the question. It's really, so we need a finality. So deterministic contracts, as you know. So finality probably connected with RTGS system as well. So I would say for financial services is very important, those two things.
Okay.
I would just agree that generally we're working on private networks in general with our clients at this point in time.
Okay, so I'm trying to explore, back to my challenge question of why do we see at a European level the type of initiatives like we've seen, for example, with Demellweek and ASX, and I know we mentioned the R word, but I was trying to dig a little bit in terms of, we have all these amazing financial institutions, financial services, calling bank, calling insurance companies, 300 years old, 200 years old, 150 years old. Okay. We do have legacy issues. We have data issues, so let's forget regulations or cross-border differences in the European Union for now. Is there something really that's another blatant obstacle to doing more of that, to really making a pan-European blockchain solution, for example, for trade, for letter credits, for assets? Is it data? What is it?
I think is it
Maybe.
business. Sorry.
Go ahead, Nadia.
Sorry, I think the first, the real point, if you find an economic advantage to go on and quickly to go on, everyone will go on. It's the first point.
Can you define what economic advantage is?
We have to try to find business model where real and where there is two kind of things. If you want to do lean and to be more efficient, you have to find a business model that lets you be more efficient very quickly, and to not forget how much you paid your network before. It's one of the points, I think, because we are all working on a big institution, and we know that there is a cost to have a network infrastructure between banks, and there is cost to have a IT system in each of our banks. So we have to find the difference, a positive advantage to change that quickly. It's the first point. The second point is how you can find a business model for new services on blockchain. And for the moment, it's not always a real case. And for example, when we talk about identity and SSI, and it's what we are trying to do with Archipel in French, Archipels perhaps in English. We try to find a business model on credential KYC system in a new way to appear, and we hope that it will work. But if you only change all an infrastructure on post market, and you see that all you do before it's very expensive, perhaps you will not go now. So this is a real point. It's the business. We can do how we want on innovation. I think we are all around this table working on that point, but your company will ask you what is the return on investment on the subject. So it's the point, I think, really. Sorry, Kraft, perhaps you feel agree on the point.
Lots of nodding heads. Tell me what you think, Sebastian.
Yeah, no, Nadia, first of all, everything what you are saying is right. And that's also one point where we try to bring the stuff into production now, because everybody is looking at us saying, okay, now you had 4 years of burning money and now show me what you got out of it. But let me also bring another perspective on what May was asking, like what are the obstacles which we see in building something European-wide, just beside the things which we already were talking about. So the R word, which we are not going to mention anymore, things like antitrust, which is always a very big topic for banks. Interoperability, we also had this topic already. There's another thing, or there are a couple of other things which I want to mention. For example, May, you already mentioned 300 to 400-year-old companies. Banks are used to work in strong and very strong competition, and now DLT means working together in kind of a co-opetition somehow, and this is something where we are not used to. So that's something which we needed to learn. Also, all the things around how to deal with IP of software which a bank develops with another bank. This is something, honestly, I don't know how the other guys in the round, what their perspective on this is, but this is something which we had to learn. Yeah, the first developments which we made, then we were talking about the contracts, talking about IP rights. And then we went to our lawyers and they were saying like, okay, IP rights, we've never dealt with this before. Yeah, so this is something where we have to get used to it, and we invested a lot here. And last but not least, also topics like governance in networks. Also something which we are not really used to. Okay, there are things like SWIFT, so on and so forth, also existing like, I don't know, 100 years with a proven governance structure. This is also something which is very new to us. And this is something which is hindering the innovation in blockchain space for me on a European level at the moment. But it's getting better.
Yes, I agree with Kraft. It's one point that's many times you see blockchain projects and you think that it's distributed, and it's not distributed. There is one node or 3 nodes, it's the same company. And for example, on Archipel, we have 5 nodes in 5 companies. And so if to manage this, it's not very easy. It's new for everyone in the company. It's new for the IT teams, it's new for the legal team, it's new for the security team, the cyber security team, because you offer them that they have 5 doors and not 1 door to protect. So it's sometimes difficult, and we have to invent this now together. And it's a true point. I think it's a real point.
Yeah, I also completely agree with Sebastian's statement as well. I think all of these items, you know, you mentioned IP as one, for example, like all of these items actually add to the time and the complexity that it takes to take things to production as well. So people potentially look at the blockchain or DLT industry and you know, may have the view that actually things are going slowly, or you know, you look at that if for anyone who's seen the kind of Gartner hype cycle, you have with blockchain at the moment, they kind of highlighted it as being the term is like the trough of disillusionment. So you have the years of hype and the years of people talking about it, but actually it does take time to take things to production. All the kind of internal compliance and all issues like that as financial institutions that we have to think about. But I think what is happening now for us at ING and for others on the call as well is now we really are starting to prove the value of that. You know, we all have applications that are in production. We are all trying to move our backlogs of various initiatives into production. So I think very soon we will start to see tangible value from that as well.
Yeah, I think one of our major projects that we ran with SIA, so SIA, the payments provider in Italy, it was a 3-year-long product. We did the POC with them. we did an MVP, and then we did the actual production rollout with, I think it was like 3 or 4 banks in the end, in Italy, and half of the time that we were actually one of the most difficult thing was actually aligning everybody. And so they spent a lot of time on business development, a lot of time on getting everybody to agree on how the network was going to be set up and all these things regarding governance. This took a lot more time than the actual implementation itself. The implementation itself was relatively quick and easy. So I mean, I just second that. It definitely takes a lot of time to get all of your ducks in a row in that kind of project.
Which is, thank you for this, because like in my experience, you know, you get to talk about blockchain and financial services, and we tend to kind of fall into the discussion about regulations as an obstacle. But when you really start asking people like you who are working on those labs, who know really what it's like to come up with this thing, that then you have to go out there, like it gets to a point that you have to open the door of your lab and go out into the big worlds, right? And really talk to people. And it really is not about that. It really is about sometimes it's this cultural change. It's the uneasiness about the governance around the networks, the IP, the interoperability, all of those pieces that which are quite tricky. But certainly I think from a financial services perspective, are the invisible enemies really for I think blockchain to really truly be brought into the financial services for transformation that it requires. I think that would definitely be good for both as a citizen, who was a retail person, but also for the economy. And on that, do you guys, and this is a question maybe to understand as well, is there an element maybe of the 2 types of speed when it comes to development in blockchain and financial services, or is it 2 parallel streams? So we've mentioned a lot of projects going into production, mostly obviously is in the enterprise, in the business to business, I believe later the letters of credit or the trade finance. To a certain degree as well, we talked about the digital assets and the corporate actions. So they feel like they are projects or they're products for the companies. Do you, in your businesses, guys, is it too early on to start? Are you looking at products where it just takes the retail side of things, like the citizen side of things? Is that even further down the line? Is it something that's maybe it's left in that parallel finance world to startups, to fintechs, to blockchain companies? What are your thoughts on that?
I think one of the points is that it's more easy to launch a project, even if it's complicated to work together with a big institution. But if you want to go ahead and to have to work on B2C project, or working on a project with new client or new services, is more difficult because for the moment we are looking for the things, and sometimes the things don't happen. And we talk about STOs, we talk about ICOs, and if you look the market, it's very small for the moment, really small. It's 1 point. And after that, it's the same if you are looking the investment in startups, in fintechs, in this ecosystem, because it's difficult for VCs for the moment to go on this subject, and clearly on the first investment in early stage on this subject, because you have to understand the technology and the project that are there concretely, and because there is a lack of trust and confidence on this subject too. So it's like a cat turning around his tail. It's not going really quickly. So, and the paradox perhaps it's that I think that there is more innovation in the second part than in the first part. So we have to wait a little bit more.
I stumped you on that one.
Everyone on mute.
Yes. Dean, what do you think? I mean, you've been working over 15 years. I mean, your background is engineering. You've done the move to financial services and innovation. Do we need to prove a financial services product that makes money before we can actually?
You know what? So I work with startups as well, with blockchain startups. And very often actually I see that they don't have actually much market product fit. So and after that actually, so they have an idea, but they don't have they didn't attach actually business value. And obviously, so I think we need as in any industry, we need to attach business value to our initial idea. So this is what I see. Believe me or not, actually, you say, okay, but you know, when they work on this, so they will have a business value. No, people think, okay, so this is the challenging for me. I will go and develop that. So I think we're still actually seeing this in reality, no such as a big idea. You know what I mean? Like a big pain point. So we would like actually the blockchain to the DLT to solve this big pain point for my clients. And what I'm saying actually, if I may use this opportunity, I say there are some big pain points. Let's say in what we saw recently, again with Asia, with Singapore Stock Exchange, they produced a digital bond. And in Europe, we have a very nice startup, Agora. So this is what I want to mention, working on Corda to actually create this digital bond. So we have a pre-bond and post-bond actually challenges. You know, so usually people call each other or actually they exchange the Excel spreadsheets when they syndicated bonds, you know. So I think so the Agora actually is just looking to resolve this problem. So this is I would like to mention that as a great opportunity, a great approach, and I think they already attract lots of attention from the industry.
Well, I mean, one thing that I suppose just to mention around the SGX and HSBC use case, well, the project is that I think a lot of the stuff that's been done before has been around sending a single bond across a financial services network, and the difference between what SGX and HSBC have done is that they have a system now that they can use to be able to manage the issuance and redemption of bonds, and that's going to eventually be rolled out into a production application. So that's quite different to what's been done before, and I suppose that's maybe the power of doing the things inside a company rather than doing them from a startup, because you can think about the long term. You can think, okay, well, look, I have this idea. This is, you know, just a seed that I have in my head. Like, I can actually plan this out for the next 5 years. Whereas actually, if you're a startup, you have to have the idea, be able to promote it, but you don't necessarily know whether that idea is going to be able to be seen through to its you know, final solutions. So we work with both.
I just mentioned this startup, and just would like to say that they're like software as a service. So you know what? So you can create a bond, and after that use APIs actually, and after that you put on exchange, and you know. So I think it's very clever. But this is what I see that this blockchain solutions need to resolve those big issues at the moment, challenges that we have. The other thing is about collaterals. You know, so this is extremely important for the whole industry because, as we know. And I see some startups are tackling this as well. So, yeah.
So, okay, so let me just trying to summarize, conscious obviously of time, and we've had a couple of questions coming through from the audience. And some of them, I don't think we should be not that we should, like, but for example, I know for a fact that tomorrow there's a whole panel on digital assets and STOs. I think later, straight after that, I think there's also a a panel on CBDCs and stable coins. So there are panels just to discuss some of those topics. And financial services is more just than just the payments thing, right? It certainly is about providing this benefit to society of funding and the matching, clearly liquidity, funneling capital when it's needed, providing for savings, insurance, and so forth. So a very wide topic, and some of them relating to blockchain will be covered, I think, later on today and tomorrow as well. So I think we've definitely covered that. We've covered, or at least we tried to wriggle down to the important thing or key theme for 2020, certainly being the coming out of the lab into production, moving into finally to this utility. We've covered the importance of more collaboration and breaking down the barriers, as difficult as it's been, Sebastian has mentioned. On that, like the very first blockchain conference I ever attended in 2017 was a European finance blockchain. And at that conference, Jeremy Wilson, who at the time was the chairman of the commercial bank for Barclays, said that financial institutions, big banks in Europe, would have to learn to cooperate to be able to compete in the future. I mean, that was 3 years ago. And we're still here, yes? So I just think it's just, you know, as financial services and blockchain, I think there's a real true opportunity. And this is not just about the stable coin or the payment thing. This is about the wider picture that, as David's mentioned, there is an element of having that experience as a financial institution that allows for the long-term planning. And it feels like there's an opportunity here that we should be grabbing in this space that we haven't really found a way to do that just yet. So conscious we have 5 minutes to go, and before Daniel's face pops up, I just wanted to ask each one of you, you know, like you've been working in blockchain for 5-6 years, which is a long time. Personal question, will you still be working in blockchain in a year's time? Are you past, and I know, just give me your gut feeling. Is it case like, you know, do you have that resilience that it takes to see this amazing technology mature and see through? And second, if you had to point out or pinpoint or put the name on a t-shirt of one financial product that's really going to benefit from blockchain, which one would it be? And I'll start with Scott. Tell me.
So will I be working blockchain in 5 years' time? Yes, I believe so. I hope so. No, yeah, no, I think as was kind of touched upon earlier, it's really now that we're starting to see the value of it being delivered upon, the promise that's kind of been talked about for a while, and I think now we're starting to see that unfold. So I think actually it's only really the beginning of you know, DeFi and of DLT in general. And I think really to your second question, where do I see most value? I think to be honest, it's kind of, we have two tracks. There's where we use blockchain and DLT for kind of efficiencies, but the other side is actually where it's an enabler to open up kind of new business models and new opportunities that kind of wouldn't be there before. So tokenization of assets, kind of just unlocking new business models that might not have been there previously. So on a more generic level, I guess that's where I see most opportunity moving forward.
Very good, thank you. Who wants to go next? Tokenization of assets on the t-shirt. I get it.
Yes, I would borrow your t-shirts as well. I will put here. I think digital security assets are number one. But having said that, actually, I would like to see payments as well. I would like to see CBDC and stable coins. How the CBDC actually can help us with payments. Just to say that today we have 17 trillion transactions on the worldwide payments. So we need smart money. So I would put here smart money programmable money.
I love it. I love the T-shirt. Tell me, Sebastian, what would you be on yours?
How much space do I have on my T-shirt? Okay, so first of all, with regards to your first question, yes, of course, I'm going to stay in the blockchain field because it's now starting to get real traction. So I'm really happy to see that. And I can agree with Dean with what he was just saying with regards to programmable money. Not only CBDC, but also putting commercial bank money on the ledger will be something which is, I think, one of the main topics in 2021. And what I would love to see, but I'm not very convinced yet that it's going to happen next year, so I would not put it on the T-shirt, is the convergence of other technologies with blockchain. So sensoric, cloud stuff, advanced analytics, so on and so forth. But I think this is going to take another couple of years.
So, Sebastian, you can have smart money at the front and IoT and cloud at the back.
Perfect.
We allow that on your T-shirt.
I like it.
Very good. David, Nadia, who wants to go next?
I'll go next. So yeah, I definitely see myself in the blockchain space in the next 5 years, without a question of doubt. And yeah, I mean, in terms of T-shirts, I think, I think for us, regulated crypto is a big thing this year. It's something that a lot of our clients are looking at, to be honest with you. And the other thing is, blockchain for investment banking. Blockchain for investment banking is going to be huge this year. I don't know, maybe on the back, maybe on the side.
That's just one hot crypto to the front, investment banking at and a Lamborghini at the front door, maybe. Very good, David. Nadia, last but not least, tell me.
Yes, I'm like Scott. I want the things be more open and more innovating, and I'm also like Sebastian. So I will say tokenization of multiple assets, real and financial one, and I will set collaboration too, because it's the point.
That's a very good point, Nadia. Excellent. Well, collaboration, I think, would have to be the one on all of our T-shirts. Okay. Excellent. Daniel, conscious we're 14:00 hundreds, whatever on my clock. I think we're on the clock. I'd like to say thank you to certainly to my excellent panel. As usually when I have panel of this caliber, I think an hour, 2 hours is not enough. I do miss the virtual, I do miss the real coffees or the chances to meet at coffee breaks. So maybe we'll be able to do that in real time sometime. And Daniel, live in the panel, we've come from Amsterdam, from Barcelona, Paris, Frankfurt, and Dublin. Thanks for the chance. I think you and Victoria should sum up all the carbon footprint that we have saved from this virtual. I think that's a very important point. Yeah. Honestly, I do miss the social interaction, but I think the reduced carbon footprint, it's a good thing to put out there as well. Okay. Thanks everyone, and hopefully the audience enjoyed sharing this hour and 15 with these incredible people. Have a good day.
Thank you so much. I was thinking that if you think you left something, we can stay for another hour. I don't know. No, just a joke. Thank you so much to all of you.
Tomorrow morning at 8.
Yeah, tomorrow morning.
Tomorrow morning.
No, thank you so much for being
Thanks
here.
everyone.
Thank you.
Thank you.
Thanks. Bye.
Bye.
Okay.
Bye guys.
Bye.
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 Yeah, okay. They should be done. So we will go live.